Hey, what's up guys? My name is Ben. Welcome to my channel. Today's video is all about how to buy your first home. And the reason I even want to make this video is because when I bought my first home, I had no idea what was going on. I didn't know a ton of the terms that the realtor was using when they were talking to me that they just expected that I should know. And honestly, it made me feel a little bit dumb. And so I wanted to make this video to help you, if you've never bought a home, feel a little bit more confident going into the situation. Now, this video is just going to be the basic step-by-step process with a few definitions to some words that you might need to know. So let's get straight into it. The very first thing that you need to do is get pre-approved for a loan. Now, a home loan is called a mortgage. A mortgage is basically a loan that is secured by real estate. So what the bank says is, hey, I'll lend you this money, but in return, if you don't pay me back, I take ownership of your real estate. So that way, if for some reason you stopped paying, they would end up getting their money back somehow, at least the majority of it. If you don't have a pre-approval letter from a bank or a mortgage lender, most real estate agents won't even talk to you. And here's why. It's because they don't know whether or not you even have the money to buy a home, and they don't want to waste their time because they work off commission and they have to make money for their families. So if you think about it, they're not just going to talk to someone who says they want to buy a home if they can't actually afford it. So to get a pre-approval letter, you have to go to a bank or mortgage lender, and they're going to go ahead and write you an amount that you can afford, and that's based off of your debt to income ratio, meaning how much you make versus how much you owe, along with how much you have saved in the bank. First-time home buyer loans usually are around 3.5% if you go the FHA route, which stands for the Federal Housing Association. This is a government program set up by my boy Frankie D to encourage the American people to buy homes, and that way it would boost the economy. So an FHA loan, you only required to put 3.5% down, and what's really cool about this is you can use this for a regular home, a duplex, a triplex, all the way up to a fourplex, and you can take advantage of that 3.5% even though your property is going to produce income. Now, you can use an FHA loan as long as you're going to live in that house for at least a year. Most FHA loans require that amount, if not a little bit more, sometimes a year and a half. It just depends on your situation, but you will have to live in that house. You can't just buy it with the intent of moving out right away and making it an investment property. So they're going to ask you for these items in order to get you approved for a loan, and that's this: your W-2 statements for the past 2 years that show exactly how much you've earned. If you're self-employed, they're going to ask for your 1099 form. Then they're going to ask for your most recent 30-day pay stubs to make sure that you still have a paycheck, you still have a job. Next is your social security number along with your spouse's if you are married and both want to get approved to get a home. Then they're going to ask for your 2 years resident history along with your last 2 years tax return if you're self-employed. Once you give this information to a bank or a mortgage lender, they're going to give you the exact amount that you can afford or how much they're willing to lend you. And now it's time to go shopping for your dream home and find a great real estate agent.
Get in, loser, we're going shopping.
Now, I'll just put a small warning out here that I did not know when I went into the home buying process. Real estate agents obviously have to sell homes in order to make money. And one way that they ensure that they do this is by making you sign a contract with them that states that they're the only ones that you can buy a home from. Now, the reason that they want to do this is because it ensures that if they show you house after house after house, eventually you're going to buy something and they're going to get a commission. Because think about it, if you didn't sign that contract, you could buy a house with any other real estate agent at any time, and although this person showed you 10 houses and this person showed you one, you would go with the one, and it would be really bad for that one agent. So it makes sense that you would sign a contract with them in order for them to make sure that they're going to make some money. The only downside to this is that if you get stuck with a really bad agent, you can't really get out of that situation unless you both agree to terminate the contract. So here's what I would recommend in this situation: ask around your friends and family and find what you call a rock star agent. This is someone who sells a ton of homes every single year. They are always closing because these people are familiar with working with customers and finding exactly what they want and not taking very long. They're used to closing really fast. So find yourself a rockstar real estate agent by asking around and maybe even interviewing a few real estate agents. If they're really good, they'll be willing to talk to you and sell themselves to you as a real estate agent that you should go with. So if you're looking for homes and another real estate agent asks you, are you working with a real estate agent right now? The answer is going to be no, unless you've already signed a contract with another real estate agent. So that's what they really want to know first off, because if you're contacting them and you have another real estate agent, they cannot legally show you any homes. Step 3, and this one's super huge, you want to make sure that you do this, is to smash the like button for the YouTube algorithm. And after you've done that, it's time to put in an offer on a home that you really love. Now, you can try to put in an offer that's low, but here's the thing: if the market is hot like it is right now, then you're probably going to get outbid by someone else who loves the home, and you're not going to get the home that you want. So your real estate agent, if you do bid low and someone else outbids you, they're going to ask you to come back with your highest and best offer, which is pretty self-explanatory. It's just how much you're willing to pay for this house, and this can be determined based off of how much the bank is willing to lend you. If that number gets beat by anybody else, unfortunately, you have lost this house. But if your offer does get accepted, then congratulations, you're on your way to owning your first home. Now would be a good time to explain what's called seller concessions. This was something that confused me so much when I was buying my first home, but now I completely understand it, and I want to teach you guys what it's about. So a buyer, aka you, could ask someone who's selling the home for what's called seller concessions. Now this is basically free money from the seller. They don't have to pay anything out of pocket, but whenever they get paid out, it comes out of their profit of selling the home. And the reason you might want to do this is because closing costs along with down payment is going to be all cash out of your pocket. So what you can actually do, a real life scenario would be this. Let's break it down using some numbers. Let's say that this home is worth $150,000. That is their asking price. 3.5% of that down payment is $5,250. Plus closing costs, let's just say it's 5%. That's an extra $7,500. For a total of $12,750 out of cash out of your pocket. But let's just say realistically you only have $10,000 to spend, then you're gonna need to ask for $2,750 in seller concessions in order to afford this home. So here's where it gets a little bit fun and a little bit tricky. You can actually offer a little bit more than what they're asking for the home in order for them to give you the concessions. So for example, let's just say that you offer $151,000 for that home, but you're asking for $2,750 worth of seller's concessions. Now this may not make sense to you, but I promise you it will in just a second. This means that realistically the seller of the home is not going to make the $150, they're going to make about $148,250, which is $1,750 less than what they wanted, but it's still better than $2,750 less than what they wanted. And you only end up paying $10,085 out of pocket, which is right in your price range. So the reason you might want to consider this is because that's like paying 3.5% down payment and 5% closing costs on a home that costs $118,500 instead of paying the closing costs and down payment on $150,000. If this confuses you in any way, I'm going to put a link up to a video that explains it in greater detail so that you guys can further your knowledge on seller concessions. Step 4 is if your offer does get accepted, then it's time to move forward with the process, and that involves some earnest money. Earnest money is money that you put down as soon as your offer gets accepted in order to secure that contract, and it's usually about 1 to 2% of the entire purchase price. Although the bad thing is that if you do back out of this contract, you do not get that money back. But the flip side, that money does go towards closing costs and buying the home. Step 5 is closing, and this is the part that takes the longest. On average, it can take up to 40 days for you to close, and the reason that is because there's a lot that goes into it. During that time, the bank or the mortgage lender is going to hire an appraiser to go out to the home and see how much the home is worth, because realistically, a bank is not going to want to lend you $150,000 on a home that's only worth $130,000, because right off the bat, if you were to stop paying payments, then they've already lost $20,000. So it's in their best interest to make sure that this home is worth what you're going to pay for it. During this process, an inspection will also be ordered on the home to make sure that there's nothing wrong with it, because for the same reasons, if there is something wrong with the home, then the value of the home can drop significantly and the bank will not be willing to lend you that money for that home. Now we mentioned earlier, typical closing cost is going to be around 5%, so you can look at conservatively estimating about 9% of the total purchase price for down payment and closing costs. That's what's going to come out in cash from your pocket. Here in Texas where I live, all closings are handled through a title company. In other states, it could be a title company or an attorney. So just make a quick Google search and you'll find out whether you're an attorney state, a mixed one, or a title company state. Once the appraisal and inspection come back clear, then the bank is going to go ahead and give all the money for the purchase to the title company. The title company is going to put it in an escrow account. Now, escrow just means an account that is not owned by you or the seller. It's a third-party account. And so the title company or your attorney is going to be in charge of making sure that the money goes to who the contract says it should go to. They're going to distribute the money to the real estate agents, to the seller, and ultimately they're going to make sure that everybody gets paid out exactly how they should. If escrow accounts or just the word confuses you, I'll link a video as well so that you guys can learn about that. And once this is done, congratulations, you will be the owner of a brand new home. I hope that this video gives you a little bit more confidence going into the home buying process so that you won't feel dumb or you won't be confused like I was when I first went into it. So real quick, here's the 10-second review. 1, you got to get a pre-approval letter. 2, go shopping and find yourself a good real estate agent. 3, smash the like button and make an offer on a home. 4, get your offer accepted and put your earnest money down. And 5, wait out that closing process and you're gonna have yourself a brand new home. If you guys enjoyed this video and enjoyed this type of content, I would really appreciate it if you would consider subscribing to my channel. I come out with at least 1 to 2 videos every single week that deal with financial education, real estate, or investing, and I would really enjoy it if you became a part of my community. With that being said, guys, I'm Ben. Garcia in the next one.